Back to this YouTube channel. This is Worldly Embassy FS, guys. On today's episode, we're going to be talking on the Btcusd. As you can see, guys, currently on the Btcusd, from the monthly time frame perspective, the market is still bullish. Remember, in my previous analysis, I told you guys every reason why we're expecting this market to start buying up from this level here, and the market is currently giving us a bullish confirmation candle, which we have 14 days and 12 hours to close. And also, we're expecting this market to get to this level before we make any further decision, because this is an M pattern. And remember, I said clearly that when an M pattern forms, we are expecting the market to get to the neckline and start going in the direction of, and start selling. That's for an M pattern. But for a W pattern, we're expecting the market to break out and retest on the neckline and start buying to the upside. So having this in mind, that the monthly time frame market is still bullish, we go to the weekly time frame. So from the weekly time frame perspective, we can currently see clearly that there's enough data that we can relate to it. And I'm seeing here there's a W pattern that was formed before this market rallied to the upside. So the market had to come to retest on the neckline. Remember what I said previously? On the neckline, when a W pattern is formed, we see a retest on the neckline and much more, movement to the direction, much more buy to the upside. Or if it's an M pattern, we see a retest on the neckline and see much more sell to the downside. And also this, so after creating a W pattern here, it rallied to the upside. Now came here to create an M pattern, which we are expecting the market also come to the neckline before we start any further movement to the downside. But having that in mind, we are only concerned about what is currently happening in the market. So what is currently going on, so we can take advantage of the current market trend. So looking at this, after the market has retested here on the neckline, giving us multiple week rejection to the upside, and we can currently see that the market is currently giving us bullish confirmation candle to the upside. So what are we saying? That the market is not giving us a kind of a trend to the upside. So we're going to go to the daily time frame to see much more information. Now on the daily time frame, you can see clearly that after the market break out from this level here, created this first level here, the market rallied to the downside. So after the market rallied to the downside, which created a lower low, we're expecting a lower high which is created. But as from the moment it created a lower high, we never saw the market created any other further lower low. The market was just ranging in a level. We can clearly see that when the market was here, around there, it went up to the upside, right? When market was around there, it came down. The market was around there, it went up, came down, went up, came down. We can clearly see that the market was in between this level and this level. You can see that, right? That was when the market was in between those two levels. So, but after some months, and weeks and days and hours, minutes and seconds, we finally saw the candle break out of the trend, the ranging market, breaking out of the ranging market. And once the market break out from the ranging market, what are we expecting? The retest and much more bullish confirmation to the buys to the upside from this kind of market structure currently now. So we currently see that after the market retest here, rejected to the downside, now the market has finally broken above it. And in time past, looking at the market structure, remember I've said something like this before, that in a ranging market there's still a structure within the ranging. You can currently see that this one is lower than this one, right? This level here is the one at this level, and this level is equal with this level, right? This level is equal with this level, and you can see that this level is lower than this level. and this level too is lower than this level. So you can clearly see how the market was currently what, facing the upside. Higher high, higher low. You can see after this great bullish movement to the upside, market came to, this was last week, and last week, and I'm going to add the previous analysis, the link on my description box. Make sure you go and click on it to watch it. When the market was here last week, I said every reason why the market should buy to the upside. Exactly this candle that formed there, that was exactly what I said last week. I said this thing exactly last week, that if the market should come below this level, we are going to be expected to buy the market from here. But if the market to close above this level and give us a bullish candle closing above this level, forming a morning star, so we're going to expect what, much more bullish confirmation what to the upside, which the market did, and definitely market bought to the upside. So but me, I'm much more pleased seeing the market breaking above this level, so this is going to give us much more confirmation to buy the market to the upside. Now, and also when buy the market to the upside, so okay, when we get to the 4 hours, we talk much more about that. But one thing you need to know that we do on the daily is to see the current trend, and as you can see, the current trend is facing the upside. Higher high, higher low, higher high, higher low. What are we expecting next? You can see this was the level it broke out from. It came to retest on the level. So I know many of you will be expecting the market to come here. No, market might not possibly come here because this is the level it broke out from, and the market is already rejecting from the level it broke out from, right? You can see market is already rejecting from there. So that we're expecting much more bullish confirmation to the upside. And also, if we should take our fib retracement from this level here to this level, I'm coming, guys. Take our fib retracement from this level to this level. And also we can clearly see that our fib retracement is like our 0.50 fib retracement is lying inside this box here, inside this box, which is the level that we're expecting the market to retest on. Even though the market, that's to say, we're going to apply the same analogy or the same formula we applied on the market when the market was here last week. So it's just very simple. If the market should close below this box, we are going to be expecting much more movement to the downside, somewhere around there, before we see the market start buying to the upside. But if the market should not close below this box and close above this box, just as this market did here, you see that, right? Just as this market did here, right? So if the market did not close below this box and close above the box, we'll be expecting a bullish candle on the one daily time frame, then that forming a morning star, something like that, before we start buying the market to the upside. So we expect a bullish candle before we start buying the market to the upside. And also, when buy the market to the upside, this year should be, you should pay attention to this level here, because here also lies the fib retracement from the weekly time frame. So if the market should close above this level here, we are going to buy to the upside. So this should be our TP, right? That should be our point of interest, our TP. Then if the market should close below this level, right, close below this box, we're going to be expecting a kind of movement down to this trend line. Either it break it or we test on it. I will continue selling the market, buying the market to the upside. So this is only the two things, but I'm not going to really pay attention to when the market come below the box. When the market come below the box, just stay on your ends. Stay on your ends. When the market come, in fact, when the market come below this box here, one advice I would tell you, when the market come below this box here, which is the level, wait for the market to come above it. We test on it before you start buying to the upside. It's just like the analysis we did on gold. If you go watch out the analysis of gold, it's just the same thing. It's just the same thing. It's just that this one is much more clear than gold. So this is what I would just have to tell you. And this is a swing trade. This is a swing trade where if you should get this, if you are trading let me say you are trading a very small account of $100, and you should use the 0.01 0.01 lot size to trade this, at least you'll be making $120. $120. So that's how you scale up for the beginners, for those people who don't have large amounts in their account. That's how you scale up. You can't just think, oh, I'm going to flip $100. When you blow that $100, do you know where you're going? Like, do you have any other place you're going to get it immediately? Are you going to get that capital immediately again to fund? No. But those pro traders now, when they blow $1,000, 300, I'm not even talking about pro traders, I'm talking about profitable traders. When all those profitable traders who are already profitable in the forex market, when they blow $10,000, $100,000, they know that they have much more capital to fund back to continue trading the market. But you that don't have much more capital, you want to start trading like them. That's when you will never make it in forex. I'm serious. That's why you never make it in forex, because you blow all your money and there will be no money left. And with that moment where there's no money left, that is when the market will now move very well and you now start crying. So that's what I just have to tell you guys. Even though the market come below this level, right guys, when the market come below this level, don't take any buy from here. Wait for the market to come above this level, retest on it, and continue buying to the upside. That is from your entry time frame. Remember, this is a daily time frame. That's from your entry time frame. The reason why I won't go to the I will not go to the 4-hour time frame is because the daily is much more clearer. Now, this analysis and the key levels is on the monthly time, on the daily time frame. And make sure you go to your entry time frame and criteria, and wait till your entry criteria to get on touch before you would take the trade to the upside. So that's all I have for you guys this week on the Btcusd. And don't forget to like, share this YouTube channel. Trade safe and stay safe. Like, share, and subscribe. And also, if you know that this YouTube channel is really causing a lot of impact in you want others to also change, so share this YouTube channel so we can reach much and more audience, so they can be learning the same thing. I'm not sugarcoating anything here. You can actually see the market, the way the market moves. That's how we do the analysis. Thank you guys. Trade safe and stay safe. I love you guys. Peace out.